bill, successfully defending the title of the building. So is that going to be an addition? And later in the year, a second floor office was added to the warehouse at a cost of 10,000. Rich deducted 5,000 in warehouse asset depreciation expense on year 2. So we're looking for the adjusted basis as of beginning of year 3. So that's 100 minus 3, so 97, plus 2, 99, plus 10, 109. Minus 5 is 104. All right, let's see. I think we are
A lot of numbers going on here, and these questions are kind of designed to make you second guess, but let's just work through it and see how the math is going to play out for us. So obviously we should start with $100,000, which is the warehouse building that was acquired in year 1, but Rich deducted $3,000 of depreciation at the end of year 1, which gets us down to $97,000 of basis. He then in year 2 incurred $2,000 in legal fees defending the title, effectively perfecting the title of the building. Now I'm going to add that to the basis because it really enhances the value to go through that legal process and ensure for any future buyers that yes, Rich Inc. was absolutely the owner of this property, and that test has already been passed, if you will. So that should add value to our building. What's also going to add value to our building is the $10,000 for the second floor office. So I'm going to add that in as well, which will get us to $109,000 for us at the moment. We also see there's $5,000 of depreciation that was taken in year 2, which will drop us down to $104,000. And sure enough, that is our answer. That is the correct basis for the property. So anytime you see an expenditure going on in a depreciable asset that extends its life, that enhances its value, odds are we're going to add that to the basis, which is what we did with the legal defense costs and the second floor office. But the depreciation would get subtracted out in these examples, and that's ultimately how we got to 104,000. So our answer is B.
Everybody got it right. Good job.
A like-kind exchange is one in which one type of property is exchanged for the
All right, this is very common, guys. When you work for a firm specializing in real estate, may mga ganong niche. Like yung firm, specialization nila, yung clients nila ay may mga rental properties or nagba-buy and sell. Kasi maraming peculiarities kapag ganun ang line of business. So, usually, pag mga boutique na firms, you'd rather focus on one niche rather than a mix of everything. Kasi nagre-require siya ng specialization and skills. Right? So, parang nakwento ko na sa inyo before, may firm ako na I used to work for, ang specialty niya naman is expat tax. And then I also come across someone whose specialization is really real estate. So may ibang language naman kapag real estate. Ito, frequent ito. Frequent encounter, section 1031, yung cost segregation. So my advantage if you guys work for a niche like that kasi hindi ganun kalawak yung sakop nung practice. So magiging in a way expert ka dun sa area na yun, right? And it's a lucrative side of the business, or it's a lucrative type of niche kasi again you're working with real estate investors. You're talking about millions in terms of assets. So malaki din ang singilan ng engagement fee kapag ka ganun. And it's a good thing to specialize on. But hindi siya madaling i-prepare. One return, would take several days to prepare because maraming back and forth in terms of communication. Kasi pag Section 1031, marami kang kailangang um, documents and other information relevant to the exchange kasi dalawang properties ang involved. Yung nilet go, tapos yung um, bagong property. So you need to have information for both. And very, very important is na-track yung depreciation ng property na nilet go. May mga ganyan, may mga client, palipat-lipat ng tax preparer. Minsan, hindi na natatrack properly yung depreciation. And when that happens, it impacts the calculation ng capital gains, di ba? Kasi your book value would be your basis to compute for the capital gains. If yung client mo na yon, paiba-iba yung tax preparer niya year after year, you'll have to gather all of the depreciation schedule. So if you miss taking that depreciation schedule, that may mean overvaluation ng asset or undervaluation ng asset. And again, that will have an impact on the calculation of the capital gains tax.
The same kind of property. Let's take a look at the A like-kind exchange is one in which one type of property is exchanged for the same kind of property. Let's take a look at the rules for these transactions.
Right. So, pag rental property, it has to be exchanged with another rental property. Hindi pwedeng rental tapos residential yung exchange. Kaya nga siya like-kind exchange. It has to be the same kind. And nangyayari naman to, most of the taxpayers do this to defer. Defer yung pagpipay ng capital gains tax. Right? Kasi parang nasa-suspend lang siya eh. Instead na i-tax yung gain because of the exchange, madi-defer siya until yung property is disposed of via sale. Hindi na siya exchange, ultimately sale na siya. So saka na muna siya ita-tax.
Actions. Section 1031 exchanges or like-kind exchanges are those where one type of property is exchanged for a property of the same kind. In such case, the exchange is considered a 1031 exchange. In order to qualify, the property must be held for business or investment purposes, and the property received must also have a business or investment purpose. Like-kind properties are properties of the same nature or character. Personal property exchanged for real property does not qualify as a like-kind exchange. However, exchanging city property for farm property is a like-kind exchange. Real property in the United States and real property outside of the US are not considered like-kind property. When cash or other non-qualified property is transferred in an exchange, the amount is referred to as boot. When boot is received, gain may be recognized as equal to the lesser of gain realized or the boot received. The qualified property received in a like-kind exchange requires a determination of the basis of that new property. In general, the new basis is the original exchanged basis adjusted for boot and gain recognized. Any realized gain is generally recognized to the extent of boot received. A taxpayer may buy and sell property that still qualifies as a like-kind exchange. Even if the transaction occurs in two separate transactions, the sale and purchase may be treated as a single non-taxable exchange. To qualify as like-kind exchanges, in the instance of separate transactions, the property must be received by the earlier of the 180th day after the date the original property is transferred, or the due date including extensions for the tax return for the tax year. The replacement property must be identified within 45 days of the transfer. Expenses in like-kind exchanges should be added to the basis of the property received. Well, I hope you liked our exchange on like-kind exchanges.
Right. So pag ganito din like an exchanges, you don't really need a lot of calculations because most of the time it's already presented in the 1031 document itself. So hindi mo na kailangan mag-compute kung magkano yung magiging capitalized asset because it will be reflected in the um, exchange document. And again, the accountant or the bookkeeper of the client must have already recorded that in the books as well.
Thanks for watching.
The Andy partnership traded its farmland with an adjusted basis of $10,000 for barren land with a fair market value of $15,000. Andy also received $3,500 cash on the trade. What is the gain, if any, on this trade? Okay, so this cash that we see here, there should be a four-letter word that is B-O-O-T, boot. Yes. That cash that is received is boot. Boot always has to be recognized. So the $3,500 is kind of low-hanging fruit for us here in this problem. Everything else, even though there's clearly a gain from the Andy partnership perspective, going from an adjusted basis of 10 to a fair market value of 15, that is deferred gain. That's a 1031 transaction. So we would not recognize that. But boot, anytime you have boot, whether it be cash or other property that is not real estate for real estate, got to recognize it. So $3,500 is our answer. Which of the following transactions qualifies as a like-kind exchange? All right, like-kind exchanges, before we even read through these, whenever you see like-kind exchange or you see
Right. Hold on. Wait lang natin mag-load, guys. I'm also trying to open ProConnect. I want to show you something. Try niyo muna tong answer yung question habang nag-load.
an exchange or qualifies as a like-kind exchange. All right, like-kind exchanges, before we even read through these, whenever you see like-kind exchange or you see 1031 as the magical number for us, you got to be thinking real property for real property. The only other criteria that you've got to think about is domestic for domestic. So as we go through this, let's see what we can eliminate. A is dealing with a copyright. That's not real property. B is dealing with goodwill. Also not real property. C and D are both dealing with real property, in this case, land for an apartment building, or in the case of D, we have real property in the US for real property outside of the US. It has to be like kind from the perspective that it is also domestic for domestic here. So when we see this, that we have property. C and D are both dealing with real property, in this case, land for an apartment building, or in the case of D, we have real property